Hey, good people. How you doing? Welcome back to Stock Up with Larry Jones. Go ahead, hit that like, subscribe, and the notification bell. We're going to talk about the Fed decision and then the Fed meeting. This video will be timestamped, and we're going to go right into the Fed decision.
The Federal Reserve reducing interest rates by an expected quarter point to a new range of 3.5 to 3.75. There were 3 dissents. The first time that's happened since September 2019. 2 were against the cut, including Chicago Fed President Austin Goolsbee, along with Kansas City Fed President Jeff Smith, his second dissent in a row. Also, another dissent for a 50 basis point cut from new Fed governor on loan from the administration, Stephen Miron. To recap, the vote was 9 for cutting a quarter, 2 against cutting, 1 for cutting 50 basis points. The Fed signaled a higher bar for the next cut, using language that it's used in the past to do so, saying that it will assess incoming data to determine the extent and timing of future rate moves. That language it used it last December to signal a pause. The rate outlook suggests consensus for just 1 more cut next year and 1 more in 2027. But as I'll get to when I talk about the dot plot, a lot of disagreement. Before the dot plot, though, I want to talk about some pretty big news when it comes to the balance sheet. The committee making a determination, it is now at what it calls an ample level of reserves. So it plans to initiate purchases of shorter-term treasuries on an ongoing basis. And then a separate document was specific, saying the Fed will begin buying $40 billion in bills starting December 12th. That's just a couple days from now. And I believe that's sooner than the market expected. And those purchases will go on for a little while at an elevated level because of seasonal demands for reserves that are out there before coming down again in April. That's what the document says. Outlook on the economy in the statement. GDP outlook was stronger next year in the Fed's own forecast, up a half a point to 2.4%. So pretty big move there in the outlook for GDP next year. The inflation outlook lower for next year by just a tick, down to 2.5%, just about hitting the target of 2.1 in 2027. The statement says the economy is expanding at a moderate pace. Job gains have slowed and unemployment has edged up. Just a note, the statement no longer says that the unemployment rate is low at the current rate. Inflation is seen as somewhat elevated. Economic uncertainty also elevated. Back to the Fed outlook and the dot plot real quickly here. Only 2 dissents, but 6 officials in total wanted no change in the funds rate according to the dot plot. So kind of a soft dissent in that regard, you can call it. 7 want no change at all for next year. 11 only want 1 cut next year. 1 person, and we can imagine who that is, Stephen Miron, just guessing here, wants rates down to 2.12% next year, or 150 basis points lower. And that is the statement and the outlook for rate cuts and the balance sheet.
Wow, a lot of moving parts really quick. Good people, look at this. Look, Trump says Fed could have at least doubled latest interest rate cut. It's funny that he said that because there were 3 dissents, right? 2 were against the cut and 1 wanted him to go at least 50 basis points. Now, the Fed is going to be buying $40 billion in bills, but we're not sure if that is quantitative easing or quantitative tightening. Some say that that's a small step towards QE, quantitative easing. So now let's listen to a few snapshots of what the Fed actually said, so I don't have to play the whole thing, and then we'll discuss where the market is and how it reacted.
So is the message that you're sort of trying to send with that you're okay with where inflation is for now, as long as people understand that at some point you still want to get back to 2% because inflation is relatively stable where it is?
Everyone should understand, and the surveys show that they do, that we're committed to 2% inflation, and we will deliver 2% inflation. But it's a complicated, unusual, difficult situation where the labor market is also under pressure, where job creation may actually be negative. Now, supply of workers has also gone way down, so the unemployment rate hasn't moved that much. But it's a labor market that seems to have significant downside risks. People care a lot about that. That's their jobs. That's their ability, if they get laid off or if they're entering the labor force, to find work. So that's really important to people.
So that was played because the Fed was concentrated on job creation and the slowing of job creation. He also talked about AI, and he wasn't that concerned about AI taking the jobs. Okay, so remember, the Fed was focused on jobs, jobs, jobs. What else was he focused on? He was also focused on tariffs, and tariffs actually causing inflation to go back up. I got a few notes here. I want you guys to look at this side chain here. So it just have all of this. Let me read it through. All right. So he talked about job creation may actually be negative. You can see that right there, right? He also said we haven't made any decisions about January. And so that was a lot of questions. What do you think about January? It's priced in that there will be one cut in January, and that's it. After that, Fed Powell is quote unquote a lame duck. Okay. Fed Powell, no new tariff, good information. I'm sorry, no new tariffs. Goods inflation should peak. All right. So you know what? I'm going to go ahead and play that because this one is important as it pertains to the tariffs and the effects on inflation. That's why inflation is ticking up, because we are now getting the effects of the tariffs.
I wanted to ask you, the inflation expectations has come down in your SEP report. Do you see the tariff price increases as passing through in the next 3 months? Is it a 6-month process that we're looking for that to end? And then because of that, is jobs the threat to the economy?
So with tariff inflation, it takes, there's the announcement of a tariff, and then there's, they start to take effect, and then it takes some months. Goods may have to be shipped from other parts of the, it may take, quite a while for an individual tariff to take its full effect. But once it's had that effect, then the question is, isn't that just a one-time price increase? So we actually look at it, all of the announcements and what you get from all that. You see sort of for each one of them, there's a time period, and then it's fully in. So if there are no new tariff announcements, and we don't know that, but let's assume there are no major new tariff announcements, inflation from goods should peak in the first quarter or so, right, or roughly. We haven't been able to predict this with any precision. No one is. But call it the first quarter or so of next year should be the peak. And from here, it shouldn't be big. It should be a couple tenths or even less than that. We don't really have precision on this. And after that, again, if there are no new tariffs that are being announced that will take 9 months to get fully in, and 9 months is also an estimate, then you should start to see that coming down in the back half of next year.
So good people, so that everything on everyone is not just concentrating on interest rate cuts. We may not even need more than maybe 2 cuts in 2026, just like he said. If job loss slows up and job creation tick up, and the effects of the tariffs peak out in Q1 of 2026, then there will be no need for any new interest rate cuts past that point. And if we get one more, because he's going to his Fed fund rates, if we get one more, then we should be good. So we really don't need aggressive. If inflation cools and jobs don't decay, then we won't even need to be stressing out about these FOMC meetings, right? So I hope he's right there. You let me know what you think. Now, let's look and see how it affected the market today. Now, good people, this is being shot, and right now it's actually 10 minutes before closing bell, and you could see all the indices are up nicely. The S&P, the NASDAQ, and the Dow are all up. The NASDAQ is up 107 points, and the Dow is up almost 600 points at 579, right? I wanted to show you guys this headline also, Fed Chair Powell. I don't think a rate hike is anyone's base case. So he's talking about the Fed board, and none of them are really looking at rate hikes, just pauses, okay? And then we had 3 dissents. 2 were against even this quarter base rate cut, which I disagree with those 2. And 1 says that we needed 50. I kind of agree with him. and then one more in January, and then we could actually just be done with the rate cutting, and then the Fed could do QE, a quantitative easing. Now, I'm not a bond expert. Buying 40 billion in bills could be a start, but it seems like they expected a little more. Let's check out a little bit what crypto did. As you could see, crypto did well. We could see Bitcoin in the last 24 hours, 0.65%. I'm sorry, 0.86%. This is in 24 hours. We had ETH in the last hour bump up. Ethereum bumped up. We have Bitcoin bumping up, and I can only imagine. Yep, here we go, good people. Just like always, remember, yesterday, this was in extreme fear. Now we move up to fear. Why? Simply because the Fed cut. And that's the way the cookie crumbles. All right, good people. It's insane how people chase stuff when it runs, but when it falls, even though they still believe in it long term, but when it falls, they chicken out. So I had a few notes here. Outlook for employment, inflation have not changed. Decline in growth in labor, that's not good. Inflation has eased, but still is elevated. We talked about what the Fed plans on doing and where he sees the peak of inflation due to tariffs in Q1 of next year. All right. Inflation on goods has peaked up because of tariffs. We talked about that. Consumer spending has been resilient. You guys saw what happened on Black Friday. And then, of course, we'll get Q4 numbers, all of the holiday shopping this Christmas, right? So even though inflation feels hot, people are still spending money. Here's what you have to understand about these FOMC meetings. It did not go like every other one. And if you were doing options and you got in too quick, you lost out, okay? And I almost did. Now, I have a new indicator that I'm working on, and it's only going to be available in Money Moves, but I want to show you guys this. It's called traffic trading. I'll talk about it later. I'm not going to talk about it. We struck our lines here, the pre-markets, and boom, let's just turn that one orange, right? And so we had our levels, right? But as you could see, the light was red. It was yellow here, meaning reversal. And then we just kind of flattened out as we have 5 minutes until closing bell. So we just ran up. But these yellow lines here, yellow here, yellow here, this is pre-market high, pre-market low. We were vacillating around here until about 1930, where we at right there. So here's where the Fed start talking. Now I'm on the 2 minute. Here's where the Fed started talking, right? My signal said a reversal was coming. We were coming. It was a red light. My signal said reversal coming. We went to yellow light. So we went from red light to yellow light. And then we climbed up on the 2 minute, hitting my mark here, boom, boom, resting there, and then going higher. So if you would have done a call, you would have made money. But if you would have treated this like every other FOMC meeting and prematurely got into a put, you would have gotten wiped out. I also did the same thing on Tesla, or should we say Stressla. Same thing on Tesla. Pre-markets, we were in the low here, and the meeting started right here. Here's where the meeting started, right there at 1930. Same deal. It went we had a red light, yellow light, and then we went all the way up, and now we're resting here. We met this mark. You would have made money, and then we came, and now it looks like we're coming back to my 542 mark, but we surpassed my 454 mark, and then we are resting back down on my 452 mark. Okay. And so just wanted to give you guys a little teaser. I've been working 9 months on that. Listen, we're going to leave it right there, but 2 places I want you guys to join me. One is Stock Up You. because you're going to learn what all of this means in Stock Up You, and you're going to learn about crypto and how to truly make money. The coupon code is still learn, and I'm just going to run that until it's over. And when it's over, it'll be over. Now, for that indicator, my indicator will be out by Christmas, rolled out. I have a small group beta testing it myself. I beta tested it during the FOMC meeting. That's going to be available in Money Moves. That's the second link below. We're still in learning stages right now because we're going to be killing it next year with options, doing scalp trades. And that was on the 2-minute. All right, good people. So do yourself a favor. Because Money Moves will be going up in price because the indicator will only be available in there. All right. And so what do we have to look for tomorrow? Things really did not take off. It didn't overreact like we generally have. To me, this is not an overreaction. OK, let's put a little BTC in there. To me, this is let's add a little ETH. All right. So we got stocks and crypto. Okay. So to me, this is not an overreaction, right? S&P. Remember, it was already priced in. The S&P up 47 ticks, or 47 points. NASDAQ up 87 points. The Dow 511. Okay. Bitcoin is for the day still down because it had that run up yesterday. All right. But Ethereum is more normalized for the FOMC meeting. So to me, I don't see anything being massively down tomorrow. Of course, it could happen. I don't know. But if this would have ran up, the NASDAQ would have ran up like 300 points based on this news because it was already priced in, I would be worried about tomorrow. Now, we could have a slight cool off tomorrow. We could, or we can continue greener. Right now, I like the way that the market has reacted according to this news. Now, he didn't sound hawkish. He sound dovish. The Fed sound dovish and not hawkish. And I also like that. Okay. I believe last meeting, he sounded hawkish because he wanted to jawbone the market to where he wanted it to be right now. All right. Let me know what you guys think. In the description below, if you're on your cell phone, hit more. Make sure, put in coupon code LEARN and get Stock Up You. And you can come and join us over at Money Moves at these prices because it's going up right after Christmas. We'll see you later. Live, love, laugh, and learn.